Hello, amazing retired and aspiring retiree community. If you're looking for extra income to supplement your 9 to 5 or your retirement, then this video is definitely for you. Selling options is one of the best ways to generate that income, and I've been doing it successfully for years, so there's no reason you can't do it too. This is my third video and my final video in a mini-series called Managing Underwater Options, focusing on MSTU, today a leveraged MSTR play, aka a Bitcoin play. Yesterday I covered managing a 140K Robinhood option. Click on the video up above if you didn't see it. And the day before that, a massive $655,000 Sofi option. If you didn't watch that, click on the link up above. And it's going to be in my video playlist down below, Managing Underwater Options. Today, I'm going to be diving into my $255,000 MSTU position. I'm keeping this short and sweet, so please give me about 9 minutes of your time. It's going to be a very jam-packed, filled with information video. My goal in each video is to show you how I personally manage underwater positions without panicking, and even more importantly, using a different technique for every single play. If you don't know me, my name is Adam. I retired in 2024 at the age of 41 years old. I currently manage over $1 million cash secured put option portfolio across Sofi, Robinhood, MSTU, amongst other positions. Today I'll be focusing on the MSTU position where I have $255,100 marker with 593 contracts across different strikes. 200 contracts at a $2.50 strike, 200 contracts at a $3.50 strike, and 193 contracts at a $7 strike. I'll show you how I personally roll an underwater position and a new technique I haven't shared yet. Rolling a winning position early to maximize your premiums in anticipation of a share price increase. Let's jump into the video. Make sure you're watching the screen and you're following all the different arrows. If you missed the other videos, definitely make sure you watch it before going any further. Let's cover the basics really fast. When you sell a cash secured put, you're agreeing to buy a stock at a certain price at a certain date. It's called the strike price and an expiration date. Now you get paid for this, and that's called the premium. The premium that you get paid is upfront your premium. No matter what happens, you keep that money. If the stock drops below your strike price, that's considered you being in the money, or what we like to call underwater, and where rolling comes in. If you close your current contract and open up a newer contract at a later date, ideally for a net premium, buying time to recover. And the new premium often lowers your actual cost basis. Your cost basis is not the strike that you're buying the shares for. It's actually your strike minus all of the collective premiums collected. If this is confusing, make sure watching the other videos, and I'll be showing you actual live examples, so don't go anywhere. Now, the new technique that I was talking about earlier is rolling a winning position early to lock in better premiums, anticipating a price increase at a later date. If you think the stock will rise like I did with MSTU, expecting a Bitcoin melt up later on, you roll before the expiration. When premiums are higher due to time value, this maximizes income while resetting the clock. It's a strategic play based on a market hypothesis, and I'll show you how I did it, specifically closer to a certain strike price. In my case, I'll show you. This maximizes your premiums dramatically. It's absolutely bonkers. Let's dive into my $250,000 MSTU position. Follow the screenshots and the arrows. It's only going to be a few more minutes for this video. MSTU is currently trading at $5.64 today as of this video. On February 20th, I sold 160 contracts at a $7.10 strike, expiring on March 21st for 70 cents a contract. Total income was $11,200 collected, or roughly 9.85% return on my money for a 1-month play. MSTU was trading at around $8 at the time, so my strike felt safe. On March 10th, I sold another 33 contracts at a $7 strike, also expiring March 21st, collecting another $10,890 or $3.30 per contract. That's a massive fat 47% premium. Why? My strike price was above the current share price of MSTU, so I sold above the strike price for a nice juicy cash grab because I have a hypothesis about what's about to happen with Bitcoin. On March 19th, MSTU was trading at $6.30 underwater for my $7 and my $7.10 strike. I rolled both sets to April 17th. The 160 contracts of $7.10, I rolled to $7 for a 50-cent a contract or $8,000. And that's around 7.1% on my money in addition to my original play. And the 33 contracts at $7 for 63 cents a contract, that is $20.79 or another 9%. That's roughly a total of 17% and 56% premiums over 2 months, respectively, for those contracts. My cost basis dropped from the strike price. Remember, strike price is $7. So now one set of those contracts is $7 minus 70 cents minus 50 cents, $5.80 cost basis. And the other one is $7 minus $3.30 minus 63 cents, cost basis of $3.07. Even if perceived as underwater, these plays are underwater because I'm below the strike price. I'm above water with these cushions. As MSTU is currently trading at $5.64, it's near or above my cost basis. Last week, April 9th, I rolled all 193 contracts at a $7 strike to May 16th, collecting another 40 cents a contract or $7,720, another 5.7% return. Anything related to crypto gives you crazy premiums, and you should definitely be wary and cautious, but don't be scared. If you know the product inside and out and you feel confident, go ahead. At the end of the day, not every play is for everybody, but we have different courses for different horses. I personally have been talking about Bitcoin and crypto before. It was cool to talk about Bitcoin and crypto, so I'm confident in these plays. MSTU was around $4 at the time, well below my strike. My strike was at $7 and the current price was $4, and I still was able to roll these to collect 5.7% return. But I still got a decent amount of premium thanks to the volatility. My cost basis dropped further. $5.80 minus 40 cents is now $5.40, and the $3.07 minus 40 cents is now $2.67 for the rest. This bought me another month to exit or roll again. A viewer warned me about liquidity risks. I'm going to post a comment down below with leverage funds. And this is an absolutely great point, but it's important to be cautious, but know your product well, like I do with MSTU. I've rolled repeatedly with no issues of liquidity over the last 3 months and even longer that I'm not even showing you. It's easy peasy. Now, for the new technique that I promised you, rolling a winning position early. I have another 400 contracts, 200 contracts at a $2.50 strike and a $3.50 strike. They were supposed to expire tomorrow on April 17th. Originally, I collected $1,000 on the $2.50 strike or 5 cents. That's 2% of my money. And $3,000, 15 cents, 4.3% of my money for the $3.50 strike. On April 9th, I anticipated a Bitcoin melt up later on in this year. I rolled early to May 9th, shorter than my usual May 16th rolls. I'll talk about that at a different time. There's a reason for it. MSTU was $4 at the time. So $4 is the current share price. My strike prices was $2.50 and $3.50. And I was absolutely winning in these trades. I was not underwater, but I expected a rise in Bitcoin later on, and I was actually right because it's now trading at $5.64. I rolled a $2.50 strike for 10 cents, doubling my initial 5 cents of premium, and the $3.50 strike I rolled for 25 cents a contract, which is an increase of 66% over my initial 15 cents that I got for the play. That's $2,000 and $5,000. Total $7,000 when initially I collected $1,000 and $3,000 or $4,000. Respectively, this is freaking dope. If I'd waited until now, premiums would be much lower with MSTU above my strikes. This early roll technique, based on my market knowledge, significantly boosted my income. So here's the deal. Across 593 contracts, I collected a total of $44,689 over these plays. My cost bases are crazy low. Roughly $5.40 and $2.67 for the $7 strike, and $2.35 and $3.10 for the $2.50 and the $3.50 strikes after the rolls. MSTU's current price, $5.64, which is above most of my cost basis or near my cost basis. I'm in great shape. If it stays above my strike price by May 9th and May 16th, I will keep all of the premiums and I'll be out of the plays. If not, I'll just roll again. I'm not scared of the leverage funds. I know MSTU well. It's based on MSTR, and I know MSTR inside and out. I manage it confidently. So let's do all the math really fast. On a $255K collateral, so far I've collected $11,200, $10,890, $2,079, $8,000, $3,000, $1,000, $2,000, $5,000, $7,720. That's a total of $44,689 over the last 3 months. We're about 17.5% in premium. That's not to brag and that's not to boast. I've got my AP Royal Oak for that. It's just to show you what's possible and to be transparent. I wanted to make this quick. If you got any questions, ask in the comments down below. I hope this sparks ideas about how I think. Lots of you are asking about a Discord, coaching, courses. I don't have that yet, but if you're interested, let me know down below and sign up for my mailing list in the comments in the description for future updates. I'm not a financial advisor. This is not financial advice. It's just me explaining my plays. Don't be scared, be cautious, but not scared to manage a position. Anything can happen and I could lose, absolutely. But I've shown you 3 videos managing 3 stocks, about 1,000 different contracts, over $1 million, mostly underwater. Do I look scared at all? Nope, not at all. Because even if I'm assigned, I'll keep rolling these, collecting premiums and lowering my cost basis, enacting the wheel strategy. Start small, know your stock, and you'll do great. Thank you. I'll see you in the next one.